In October 2024, US debt was $35 trillion, and on current policies, US debt is forecast to reach an all-time high by 2028. By 2054, US debt will rise to a mouth-watering 180% of GDP. Yet this forecast doesn't include the prospect of presidential candidates implementing policies which will increase debt even more. Trump's policies are estimated to add an extra $7.7 trillion, while Harris's policies an estimated $4 trillion. The problem for the US is that entitlement spending such as healthcare, pensions and social security are all expected to keep rising as the population ages. Yet in an era of political populism, there is little political will to either raise taxes or reduce spending. Yet as debt rises, so does interest payments. In 2023, the US spent $900 billion on debt interest alone. But this is going to rise. By 2036. Debt interest payments will be an expected $1.6 trillion, becoming one of the largest components of government spending. But does it matter? How much can the US safely borrow? One of my economics students claimed that half of the videos on YouTube say that US debt is an Armageddon waiting to happen, whilst the other half say the US can borrow as much as it wants to. Well, firstly, to put US debt into context, Japan has debt of 260% of GDP, but interest rates are low and there's no prospect of imminent default. After the Second World War, UK debt as a share of GDP reached 260%. There was no debt crisis. In fact, the UK invested in universal healthcare, welfare state and building new houses. Though ironically, it should be pointed out, the UK was helped by a loan from the United States in the post-war period. Yet, at the same time, you might point to other countries like, say, Argentina, Zimbabwe, who have gone through debt defaults despite much lower debt-to-GDP ratios. Now, the United States is much more like Japan than Argentina. The United States does have a few advantages when it comes to borrowing money. Firstly, it borrows in its own currency. If it wanted, it could literally print more money to buy its own debt. In fact, the United States already does this to quite a large extent. In 2022, the Federal Reserve owned 20% of US debt, or $6 trillion, and other government departments owned another 20%. In other words, the US government is at least in part borrowing from itself. So it's got a very easygoing creditor of your own self. It's not like borrowing money from a bank where they can demand it back straight away. Defaults are much more likely when you borrow in a foreign currency to foreign creditors, which becomes very hard if your currency devalues. Last year, the US did experience a credit rating downgrade from AAA to AA, but it's still amongst the best in the world. But creating money to fund debt is not a free ticket because it can, in many circumstances, lead to inflation. We'll look at more of that later, but another aspect of US debt is that, at least at the moment, there is pretty strong demand for US treasuries, which is how US debt is funded. They are generally seen as a very safe investment around the world. With high savings in the United States, especially amongst the wealthy, there's strong demand to buy US treasuries as part of a savings portfolio. The wealthy have enjoyed significant tax cuts in recent decades. The Trump tax cuts of 2018 saw $200 billion of tax cuts for the richest 20%. Now, when the wealthy have more wealth, what do they do with that? Well, at least partly invest in assets such as the US treasuries. Economically, the US could easily reduce the deficit and debt if it wanted to by raising taxes. But if you cut taxes for the wealthy, at least some of these extra savings will end up financing the debt. There's also strong overseas demand for US treasuries because they're seen as a relatively good and safe investment. As of April 2024, foreign countries own approximately 23% of total US debt, or nearly $8 trillion. though this is actually a significant decline from 2012 when foreign holdings were 34%. In other words, the US has no difficulty in financing its debt because of strong demand from both domestic and overseas investors. However, just because in the past it's been easy to finance the debt doesn't necessarily mean there aren't reasons to be concerned looking at debt projections. National debt is a convenient way to deal with emergencies. You can see the spike in debt during the Great Depression and World Wars. Debt can also be a good way to provide an economic stimulus when the economy enters into recession. The best way actually to avoid rising debt to GDP ratios is to avoid economic stagnation and depression. But the current problem of the US situation is that the deficit is rising despite strong economic growth. This is supposed to be the time of reducing deficits when growth is strong. And what this means is there's an underlying structural deficit which is only forecast to keep getting bigger. Now, when the US goes into recession sometime in the future, the deficit will need to widen even more. Debt is forecast to rise to 180% of GDP. But in addition, there's almost certainly going to be some unexpected shocks which require emergency spending. The US is increasingly hit by extreme weather events needing federal bailout. In the past couple of years, COVID, the Ukraine war, all caused unexpected rises in debt. Who knows what the next few decades will hold in store? Now, one aspect of debt is that it depends on why the government borrows. If you borrow to fund investment in infrastructure or better education, then this increases a nation's assets, and it can enable higher growth in the future, which will help pay the debt back. But if you are borrowing to pay pensions and healthcare for the elderly, this is not increasing a nation's assets and potential economic growth. In fact, there's a real risk that US economic growth could slow down in the future. Now, currently, the US is actually one of the few advanced countries to be experiencing strong economic growth. It's certainly outperforming the likes of Europe and Japan. Thanks to a relatively high birth rate and high immigration, the US also has better demographics than most advanced countries. The US should age more slowly than many other developed countries like in Asia or Europe. This is good news for future debt because high economic growth is the best way to stay on top of debt interest payments. But if US economic growth did slow down, which is really quite possible, then you start to get an unwelcome dynamic of stagnating output and falling tax revenue, but still need to increase government spending on pensions and healthcare. Now, economically, America could definitely afford to reduce the budget deficit if it wanted to. It's estimated the richest 1% of Americans pay an average tax rate of just 3.4%. US tax rates are amongst the lowest in the world. The Centre for American Progress argue that either tax rises and/or spending cuts of just 2% of GDP would be enough to stabilise future American debt. But the big question is, does America have the political will to do this? Republicans want to extend tax cuts. Democrats generally want to increase spending. No one has gone into the election with a meaningful strategy to limit the growth in the budget deficit. If the US experiences any kind of economic shock, such as a recession or fiscal crisis, overseas investors may start to become a bit more reluctant to buy US treasuries, and then you'll need higher bond yields to compensate for the higher risk. Already bond yields have risen significantly in the past 2 years, and it means that debt interest payments as a share of GDP have risen much more than previous forecasts. It could rise to over 16% of government spending within a few years. And here, interest payments will be crowding out other forms of government spending. It's hard to reduce debt if you have to keep spending more and more on debt interest payments. Now, it is true in one sense that the US can never go bankrupt because the government can always create money to meet its creditors' demand and buy its own debt. And as mentioned, it was able to do this to some extent in the 2010s because of that unusual era of low inflation and very low interest rates. However, this magic money tree is not without unwanted gifts. It can be inflationary in many circumstances. If there was political deadlock and a president ordered the Federal Reserve to open the printing taps, then the increase in the money supply would in most circumstances be inflationary, reducing the value of money. Bondholders would see a fall in the real value of their bonds. Foreign investors would be less willing to hold US Treasuries. Higher inflation would cause a devaluation in the dollar, and because investors are losing real value, they will demand higher interest rates to keep buying US debt. So how much can the US borrow? There's no easy answer. Definitely they can borrow a lot. National debt is often misunderstood, and it's not as bad as these national clocks may first appear. But I think there are reasons to be concerned about the US debt situation, or perhaps more accurately the US political situation, because there's an increasing political inability to reduce deficits despite relatively good economic times. And in the upcoming decades, with an ageing population, slowing economic growth, then the trade-offs are going to become more and more difficult. Now, the US has benefited from in the past strong economic growth, high immigration, but there's no guarantee this will continue in the future. The US could easily follow other countries into the cycle of lower economic growth and falling tax revenue. And if that were to happen, debt could rise and debt interest payments keep increasing as a share of GDP. The US Treasury has a very strong global reputation, but nothing is guaranteed forever. Now, the US has many problems beyond just rising debt. One intriguing thing I came across recently was a very low life expectancy of Americans. This video goes into some of the reasons why that is the case.